All right, Alejandro, I'm excited to chat with you. We're live and recording. You run a company, you started a company along with some others called Defactor. First off, would you call it a company now or would you call it something else?
Good question, Mike. Thank you very much for the invite. We're extremely happy to be here. Well, look, so we have a DAO, and the idea was just to set up this decentralized company that could help us to grow an ecosystem and have a community. But from other perspectives, yeah, you could potentially call that a company, right? So I think it's just a mix of both, probably.
Yeah. Let's draw some lines around where you are. How long have you been operating this? And then how do you measure traction? Is it by the number of the market cap of the DAO, the users, transactions? How would you give a sense of scale?
Yeah, so Defactor, we started Defactor more than a year ago. We did our token sale in November last year. But we have been in the DeFi space for longer than that. We were one of the first companies ever to do transactions with real world assets, right? So from the traction point of view, it's a bit, and this is one of the things that is completely different from DAOs and holding a token or have that utility token, right? Because it's about the perception and how the community is just engaging with that token, right? Even though we have done, now we're close to $1 million or so dollars in transactions, right? That has been flowing through our protocol. We need to still keep growing the community. So from the development on the company, yeah, I think we have traction. We have been pushing a lot of volume through it, and that will keep growing. And our idea is that if we aren't kind of continuously presenting this type of improvement to our community, well, they are going to just keep holding the token and getting more and more interested.
Gotcha. All right. So let's talk about what exactly you are attempting to solve, not necessarily with the DAO, but at Defactor. Is there, I know the summary that I was able to find was Defactor is a platform that expedites the onboarding process for real world assets in DeFi. It's a bridge between decentralized and traditional business. Real world assets can be turned into NFTs, and NFTs can be used to receive funding. That's all sounds a little high level. Is there a specific example or something that can really concretely define what you've done or what you're trying to do?
Yeah, definitely. I think the best way for people to understand the concept of Defactor is just telling you the story. How we ended up here, right? Because that's probably the best way to explain this type of scenarios. So we had a company called Consolfreight, right? And in Consolfreight, we started providing digitization services for the logistics and supply chain industry. And look, it was going well. It was doing fine. And then COVID had different plans. And when COVID hit, fine enough, nobody cared about digitization and nobody cared about actually improving the current processes of operational setups, right? Because the number one priority for everybody was liquidity. And we realized about that quite quickly. And chatting with our customers and our customers that are mainly importers or exporters, we realized that they have exactly the same issue, right? And it was liquidity. So we have been piloting some financial products, right, to offer to our customers as well, especially on the trade finance space, right? And what we did was just kind of change the way that risk was mitigating the trade finance, right, in order to decrease barriers of entry, right, and bring these services to a lot of the SMEs that are out there that they cannot get a hand or they cannot get a hold to this type of liquidity, right? So with that, actually, we started exploring with the traditional financial sector, and we were not lucky whatsoever. And by just pure coincidence, we were presenting our case in a event in Vienna, and the guys from MakerDAO were there, right? By pure luck, right? Because this was a purely traditional event, and they were there. So was Gustav Arentov, right? That was one of the at that point one of the leads from the sales point of view in Maker. And he said, "Look, guys, what you're doing is really interesting. Do you want to do a pilot with us?" So what? Yeah. So we are from Maker. We knew Maker, right? But we didn't have the understanding that they were actually just pursuing just bringing real world assets at that point. And we did a pilot with them. And finally, we were one of the first companies to use MakerDAO's funds to fund a transaction in the real world. And that was a transport invoice for I think it was $7,000 more or less from Miami to Texas, right? And from that point, actually, we said like, wow, this is a great opportunity. And we got involved with the guys from Centrifuge, right? They are one of the leaders in the real world asset space. Consolfreight at the moment has placed more than almost $30 million so far and has put through more than 500 assets. And at that point, we realized, look, there is something here, right? This is a huge opportunity. But the problem that we have is the operational burden in order to be extracting this liquidity from the DeFi space. Because, well, DeFi is fairly young, is immature. UI, UX is just only starting to develop. So if you are bringing companies from the real world space, like a traditional financial companies, right, that are extremely interested about alternative sources of liquidity, the way that it's structured at the moment is not going to work, right? So what we say is like, look, what if we create a platform, right, that is going to help traditional or alternative financial companies to be tapping into that liquidity to provide alternative sources of funding to people, right? Because that's the need, right? That is quite clear. It happened for us, right? We were looking for that liquidity. We couldn't get it, but DeFi actually was our source to prove that we have a business case and that we have a business there, and it worked. So what if we give that opportunity to more companies, right? And by proxy, providing liquidity to the end users, because I think that's important.
Can I pause you?
Stats, right? Like
there.
Yeah,
so just to make sure I understand what you're saying. So you met the guys from MakerDAO at a conference. They said, "Hey, let's partner." And specifically by partner, what went down was you have clients of yours that want money to run a business. Usually that business is around international trading of goods. That's what you were doing at Consolfreight. So correct. Consolfreight lends money, you charge an interest rate, people pay you back, and you make money off the interest rate. And then you said, where's your source of funds? Where's Consolfreight's source of funds? Let's take a loan out from DeFi. And that's where you said, in order to fund the money that we give to businesses, we're going to take it from MakerDAO. So you were, in that sense, a bridge. You were taking money from decentralized world and then lending it in the traditional finance world. Is that right?
Exactly. Yeah. Exactly. That's pretty well summarized, right? And when we moved from Maker, we moved into the pools that Centrifuge had been provided, right? And we were the first a pool in Centrifuge. Has been the longest real world asset in Centrifuge. That's Consolfreight, right? And that's how the whole idea came. So the important component, right, is how we can make, as I say, like bring more of these Consolfreights of the world and just bridge them into the DeFi, right? Because it's an interesting alternative way to provide liquidity, right? There's a huge opportunity. Where I was
going to ask you, what's the alternative? What were you doing previous? What was the standard previously? So if you didn't take it from the crypto world, where would you get money from? Banks?
Yeah, you get it from banks. You can get it from family offices. You can get it from investment funds, right? The problem with that type of liquidity is it has certain limitations, right? When you are grabbing it, it's not as flexible, right? The way that they have to mitigate risk is pretty standardized. In a way, it's a cookie cutter. but cookie cutters actually don't provide coverage for everybody. And that's what we are seeing. And that's probably what we believe that DeFi can provide an alternative. What we believe in Defactor to do in the future, right, is to kind of change the way financial structures are set up, right? Why? Because if you are analyzing risk in a completely different manner, right, and in a less traditional way, you're going to be providing financial services to some industries that at the moment are not really covered. And one example of this is, for example, whiskey. Whiskey industry is setting in a lot of illiquid assets at the moment that can be fully liquid because the value is huge. Irish whiskey is growing, I think it's around 300% year on year from sales around the world, meaning that every single cask of whiskey is extremely valuable. But the problem is like financial institutions at the moment don't know how to mitigate that risk. And what we are trying to do with Defactor is just that, finding companies that can do it. We did a pilot with a small distillery in Ireland, right? And we were able actually to provide funding to this distillery in Ireland using those casks as collateral. So we tokenized those casks. We took those casks under our control, and we lent money, right? And then 90 days after, 120 days after, they repay, and those casks are back to them, right? So it's just using that alternative that assets are valuable if you know how to mitigate risk and how to provide those financial services, right?
Gotcha. And so the purpose of this middle company, Defactor, is to do what it normally does, which is lend out money to all sorts of different businesses and effectively verify. So is the primary business on the regulatory side?
No, so Defactor is not providing financial services, right? Defactor wants to bring the companies that are providing the financial services and give them all the tools to tap into the DeFi space, right? For example, on ramp of fiat, that is a really tricky thing at the moment. All the reconciliation piece, because you're going to be moving fiat, crypto, and potentially fees in some of these protocols. The tokenization piece as well, because the way that it works is these companies are bringing assets, right? And those assets are real world assets that need to be tokenized. And those NFTs are going to be locked in liquidity pools, right? In order to be extracting that liquidity. And then when you repay, well, those NFTs are going back to the owner in a way. So what we're trying to do at the moment is just onboarding these financial institutions, you can call them, or financial providers, right? And what we do is a string due diligence on them, their processes, how they're mitigating risk, their experience, not only as a company, but also as individuals at the team. Because there are a lot of companies that have 2-3 years, but the experience they have behind can be more than 50 in different spaces, especially on the financial space. So we are assessing risk in a completely different manner, right, in order to onboard these guys. And what we want to do on the other side is just bring in these investors that say, look, you know real world assets pretty well. You know how they behave, right? So what if you spread a little bit your portfolio and the risk on that portfolio, and instead of investing a lot of your money in digital assets only, well, you just take a punt into real world assets that are a little bit more stable. They don't have the same yield, that's for sure, but the risk mitigation for their portfolios as well is something beneficial, plus getting tokens as rewards for that investment. So I think it's an important and attractive proposition for everybody that is in the ecosystem, right?
Does the end experience for an individual or business who's receiving that loan change? So there's a company that's issuing the loan. We'll call them the lender. And then there's the person who's receiving the money. That process has been in place for a long, long time, and you don't want to change that. You want to change the source of funds for the lender. Does the experience for the lender, how does the experience for the lender change? Do they get tokens when they issue loans for?
No, at all. Actually, they get fiat.
Okay.
Unless they want to receive stable coins, right? But that will depend as well on how savvy the companies are, right? But the idea is for them to just tap exactly the same as they tap into traditional phase. So they are providing fiat to their customers, they will be receiving fiat as well.
That's awesome.
So in that sense, is not going to be any change whatsoever.
And so why build the DAO? What purpose does that serve?
Yeah, multiple components, right? One, I think creating that ecosystem and that community, I think is important, right? Second one is that will allow you to have a token sale, and that's a great source of funding a project, especially the one that we're going to be in the middle of DeFi. It makes perfect sense, and you will have some traction with it.
And would the community be? What's the community? The community is the community of lenders, or all talking together on Discord or Telegram. Like, what is that practically?
So it is. So we have three different profiles, right, in that community. One is the lenders, right? The guys that are going to be kind of using the services per se. The second one is the investors, right? That they will be getting rewards in tokens, and they're going to be a big source of, or it will be kind of the engine, right, for this to happen. And the third one is the people that are holding tokens, right, without being one or the other, right? And you always need that. You always need that community. You always need people that are trading the token, especially when the projects are starting, right? Because you are not going to have, let's say, 10 asset originators that are being constantly in need of tokens.
10 what?
So you need the people that are believing in the project and I'm going to asset originators.
Oh, asset originators.
Financial companies.
Right.
Yep. So yeah, you need these people that believe in the project, the people that are holding tokens, that are trading. People that are trading that are important, right? They create volume and they see opportunity. So that's kind of the three different profiles that we have.
And so by having the token, so flow of funds would be, say, MakerDAO or some liquidity pools, your original source of funds. So people put money in there, you take it out there at whatever the market interest rates are, and then you'll go and lend that money to the lenders who then make the decisions on how to distribute those funds to individuals or businesses. The token that you've minted, the purpose of that is not for the purposes of liquidity. Is it standalone from what you're doing, or is there integration to the current flow of funds? Or I'm trying to understand that piece better.
Yeah, so the utility of the token basically is one, to provide access to the company. So meaning that if you want to just get access into the ecosystem, access to these funds, you need to stake tokens, right? And the staking component comes as it comes as a way for these financial companies to say that they have a skin in the game as well. Meaning that if there is a first loss, those staked tokens will be the first ones to be liquidated, right? Because what we want to do in the ecosystem is everybody that is participating will have a skin in the game, right? So you have investors, they have a skin in the game. You have these financial companies or asset originators, they have a skin in the game. And of course, the end customers will have a skin in the game. And ourselves as well, right? Because if something goes wrong, we are the first ones who are going to be putting the face in there. So that utility token serves that purpose. That's one of the first ones, and the main one for asset originators and investors. Then it serves as rewards for everybody that is doing things well in the ecosystem. So if you are an asset originator and you're pushing a good transactions, you're going to get tokens as rewards. Same for the investors, right? Or any other participant, right, that is coming with good ideas, right? Then the governance piece is a standard one, right? If you're holding tokens, so you're going to be able to provide some guidance on what the project is going. For example, what are going to be the next asset class that is going to be onboarded as part of Defactor, right? Or how we should split the rewards or components like that will be providing some good of a path, right, on where the project is going to be heading. Then you have staking as well. That is just standard, but that's other ones. We're working in more utility at the moment for that token, and we'll be communicating that. We believe that the more utility the token has, well, the better it's going to be for the community, and people are going to get more and more engaged with the token.
Yeah. Now, could they be run separate? I mean, could you have not created the token and still have a functioning business? And then the token serves as a method of communication. If people can stake, they can email you or telegram you and say, hey, I'd like this feature, and you take them more seriously. And that seems like, am I correct to understand that they're separate? Would you almost call them like separate projects under the same roof? They're not intertwined by necessity, right?
No, look, I believe, right, that you could have a company like this that is fully centralized. There is no doubt you can run something like that is fully centralized. But after us seeing the benefits of decentralization, especially from the point of the democratization of funds, we believe that at some point the whole process should be fully decentralized, right? We are not there yet. At some point, we're hoping to be there, and the idea will be to create a good framework that will allow us to just run full risk assessment and define if a risk assessment methodology is good, just running on different nodes and decentralized or different and oracles that will allow us to just take decisions by smart contracts. Are we there yet? No, we are not, right? But that probably will be the best way to structure it. But we need to start somewhere, and we believe this is a first step. And the idea is just keep moving towards that direction, right?
Totally. And is the DAO separate from the token, or are they the same and
No, it is the same. So okay. the token is a token that has been issued by the DAO. So it's a utility token of the DAO.
Gotcha. Help me understand, like, I'm new to crypto. You have the DAO and then you have the token. The token, I think people are more familiar with the concept. You've minted a token. You have a white paper that explains the distribution, the benefits of staking, who has the ultimate control, how voting works, what percentage the founders hold on to or investors, and that kind of thing. Then the DAO is a separate thing. So the DAO is not a token, but it's a decentralized organization. How did you create the DAO, and how is it organized now?
Yeah, so they are completely linked one to the other, right? So the token is is kind of the native token for the DAO, right? And the way that the DAO is structured is there is no shareholders in a DAO, right? There are people that are belonging to a board, right? And the board kind of takes some decisions that will be giving mandates to people to be operating, right? So, for example, there is a board, and that board is giving me a mandate to action X, Y, Z, and I'm going to be operating under that mandate, right? It's like in the beginning, DAOs need to set up some structure, right, for the future, being able to use have a full decentralization, a full governance that everybody can come and just give them saying, right? So if we go into the case of MakerDAO, right, when MakerDAO started, they were not a full DAO per se, right? They have an association and they have a foundation, right? And what happened is the foundation is kind of protecting, right, that association is heading to the right way until the whole community is prepared to just kind of take that responsibility from the foundation. And then when the foundation sees that responsibility is taken by the community, well, they can just disappear. And that's exactly what happened in Maker. But if we go there, Maker has been like a 5-6 years. They only removed the foundation, I think, probably 18 months ago. So
yeah,
and everybody's learning from them.
Yeah, right? That seems to be the trajectory.
So I think it's the,
I think
it's that process, and in that process that can take time.
Yep, it's like I guess to emulate nature would be there's a seed, there's a place where you start that contains the information that would be like, hey, we're going to raise money, we're going to start an LLC, we're going to launch just as if we were a perfectly normal company, but then we are going to build the token. We're going to build the decentralized access mechanism is how I think of it. And then people buy into that, and that separately grows. And eventually we shrink our LLC, the seed shrinks, and then the flower grows, the DAO grows, or the token grows. And then the foundation I view as still a method of centralized resource allocation. So the foundation is like, hey, we benefited tremendously financially from this DAO. 10% went to the founders or 10% went to the foundation. So they spread that money, really just trying to further accelerate growth of the DAO. So things like, hey, we're going to invest in, give money away to people who are building apps or layer 2 on top of our layer 1, try to continue to accelerate growth.
Marketing is another one that is extremely important as well, because people tend to forget something. And it's that even though it's a DAO, there's people behind doing all these tasks, right? And in order to move that machine, you need money. And operationally, you need money to just be able to pay salaries, to pay agencies, to pay other projects that are working with you and collaborating. So it's needed. That money needs to come from some place. And in the beginning, somebody needs to just do that allocation of funds, right? So it's interesting. I think we are seeing more and more cases on how DAOs can be a way to solve a lot of the red tape and burden that is happening in traditional companies. But we are far. I think we're far to seeing a perfect DAO. It doesn't exist. I was reading an interesting book last time where someone was mentioning about how from the anthropological point of view, humans, we are wired to lead or to be leaders, right? And there is an interesting concept in the DAO, right? Because for everything to work properly, everybody needs to be a leader in a way, right? You need to just cast your vote. You need to be vocal. You need to just be in the front foot, just making sure that the DAO is taking the path, right, or the right decisions.
Right.
But if you are happy just to be in the back seat and waiting there for somebody else to take the decision, well, it's not going to make much difference, right, compared to a centralized organization.
Yeah, I mean,
I think there's a lot of education that needs to be put.
By parallel, that's similar to how a democracy works, right? There's the power invested to every individual in the network or in a democracy, and they can cast a vote literally. And if they don't cast a vote, that by proxy means other people who do cast votes count more. If only half the population votes, well, then the people that do vote count for 2 because their votes are more influential. So if everyone's in the back seat, then, we better be damn sure the people who do vote know what they're doing. Otherwise, the ship's off course.
Definitely.
Yeah.
No, definitely. Look, it's super interesting, right? But as I say, I think we are just in the beginning of this.
So how did you went from this concept, previously you weren't even in crypto, met the folks from MakerDAO, said we want to make a token ourselves and construct the DAO. What did you do? Was there a tool out there? Is there some team you hired? How did you practically get this up and running?
Yeah, look, we have the luck, right, to have good contacts in the crypto space, and some of our co-founders they have been working on the or facilitating, right, companies to create or to define token sales, right, and without that knowledge, I think would have been really difficult. If you ask me, comparing this to a traditional way of raising funds, it's just completely different. It's just beyond comprehension, especially in the beginning. I still remember the first time that I did an AMA and say, what is this concept? Like, it's just so different, right? I've just been there in Telegram, just answering questions and so on. And then I remember because like how AMAs are structured, that you have like, okay, questions that they ask you from, well, like they send you these questions, and you have the Twitter questions, and then you have everybody just asking you questions. And I remember we needed to select 5 questions from 30,000 questions, right? And you're like, wow, what is this, right? So, and we were doing these things every single week, right? Just to create some
interest,
name from the brand, interest, just getting people on board and all that. And it's so different, right? It's extremely difficult. And navigating through all that is different, and it's hard because there is so much noise. So it's hard to pay attention to what is real and what is not, and defining, right, what are the key components that need to be taken out of it. So it was hard. Same as when you are just dealing with investors, it's completely different. Like I'm more like 18 months ago was completely different thing that what is happening right now. We're seeing more traditional investors coming into the crypto space, and we're seeing more and more refined investors, right? That are starting putting their operations.
Let me ask you this. I want to make sure I clearly understand. So one of the first things you did was AMAs. You created a Telegram group. You created a Discord channel. You said, "Hey, we're going to do something."
Yeah. Discord was after.
Discord was after. How did you launch the token? Was there a service, a platform, an agency you hired to help build? How did you actually get it up and running?
Yeah, so we did an IDO. We did 2 IDOs, and then we did a fair launch. We used Copper.
An IDO?
For that. Yeah, IDOs.
What's an IDO stand for?
So basically,
initial. It's not an ICO, initial coin offering.
Oh, wow. Initial, initial something offering. Well, I went blank. Huh?
Yeah, IDO, initial DEX.
Yeah, so basically,
DEX,
right?
Right? Initial DEX offering.
DEX, yes, yes, that's it. So they are the ones that are offered by the launch pads, right? So you have the guys from, for example, MantraDAO, or you have the guys from Polka Starter. You have those guys, right? And basically, they have some communities, and they help you with marketing and just getting some traction as well.
Gotcha.
So you allocate a small chunk of tokens to those communities, and that kind of helps, right? Just for the community, just be more aware, bring more people into the project, and so on.
What were those again?
And from there, actually, we went into.
Can you name those 2 again?
Sorry?
Can you name those 2 again? Those communities that help you launch?
So you have MantraDAO. You have we did MantraDAO, and we did Polka Bridge.
Polka Rich.
But I say you have more of those companies. Yeah, like I have Polka Starter. You have DAO Maker. Yeah, there are multiple.
And these are communities of people who get together, and effectively it's a platform of awareness. So they're not offering you technology as much as they're offering you people in awareness, right?
No, they are not. They are not. And then what we did was a fair launch, and we went to Copper.
Copper? Yeah.
So Copper launch was, yeah. Are you aware, or do you know Copper?
I am familiar with it, but I like to explain it just so everyone is aware. The Copper helps you launch your token, so you enter in everything you need to. How technical is that process?
I think it's easy enough. They make it easy enough, right? For someone that doesn't have a huge tech background to do it. I think the most important component there will be about your knowledge on token economics and the requirements for those tokens, right? Because you are raising liquidity, so you need to just understand pretty well where will be the points at which you're going to be selling your token, right? And times and the distributions and things like that, right? And that's critical. We needed good advice, and find out the guys from Copper. Sorry, they were extremely helpful for it. And one of the co-founders that we have, they specialize on it. So without that would have been a state.
Oh, interesting. And and their model, similar to the others you mentioned, is that they take a percentage of the coins? Oh,
No. Copper is I think it's a percentage out of it. And that's the way it works. The guys from the IDOs usually use allocate some tokens to them. That is a bit different.
Yeah.
In that sense. And that's the thing. Like that's another component that, from the token point of view, for a project that is starting, well, the token can help you as well. If you don't have enough cash, you can navigate and use those tokens, right? As compensation.
And what
without limiting your cash flow, that is important.
Yeah. And what did you learn through the experience? What would you have done differently? Do you feel like the variables that you set, either the offering, it looked like the launch was in November of last year. Anything you would have done differently in hindsight?
So many things. So many things. Look, you see, now I'm reflect on it, and it's like, wow, it was extremely hard. It was extremely difficult. One of the components that I will say is we cannot believe that the token sale, right, of that TGE, when that token goes public, you cannot believe that that's the pinnacle out of that process, and you quickly realize that there's so much more. Like the mountain, that's just a little bit of the peak, and what is coming after is even a higher mountain, right? So I think you need to prepare for that, and just have it as a milestone. But whatever is coming after is equally as hard, right? Like I'm maintaining that pressure, the community, just how to deal with the community, because things not always go 100% or they go well, which means that you need to just you need to just be aware that the community might be pissed off with you. So you need to just reassure them and work on it. Have a lot of marketing behind that is helping you as well, just to communicate what you're going to be doing, how you're going to do it. And all those things, like from our perspective, could have been better, right? Then on the token economics as well, there are a lot of things that you will be learning that, oh, well, we probably should have been doing that. But at that point, we believe that there was probably a better structure. And
what specifically did you feel like?
It is what it is.
On the marketing side, you said you'd have to be prepared for backlash or people being upset. Was there a decision that you guys made where people weren't fond of the outcome?
Look, there was a component that I think we were victims of our own success, because our token sale did extremely well, and the price went way above what would have been expected ever. As you know, like a copper, that's a reverse Dutch auction, and we have been telling people all the time, please don't buy at the beginning. Just let the price just drop. And when it's stable at that point, or when you believe that the token has the price that you believe that you can pay, or you would pay, so you go at that point. And unfortunately, people didn't go for it. So the price increased straight away, and that didn't help, right? So our price ended up being probably 4 or 5 times what we expected. And when it goes into the public, well, it has to be a drop, right? Because people are going to be just taking advantage of how quickly that price went up. And unfortunately, even if you put tons of liquidity, it's impossible to just maintain that price, because it's based on nothing. So that definitely will just give you a backlash, right?
Yeah. Why did that happen? Is there a large number of people who just buy coins as soon as they launch and try to ramp them up, or what are the mechanisms behind that ramp up, do you think, that you guys got caught up in?
Yeah.
How do people benefit from that?
Yeah, definitely. As you say, like other people that just buying cheap and selling a higher, and it's normally that people are getting dumped on, right? And that's a cycle, right? People get dumped on, and somebody buys, and then if they have the chance to dump on, that's it. And it's funny because we have a lot of people from the community that they were really discontent with the fact that, well, they bought a token that was too high and it dropped dramatically. But there were some other ones that made money out of these fluctuations, right? And they were extremely happy. They were clearly not communicating that in the community, right? But internally, we had them, right? And there was a lot of people that were saying, "Oh, guys, you did extremely well. Congratulations," and so on. So it was kind of bittersweet in a way. The other thing is like, we raised enough money to make the project strong, to build whatever we want to build, right? And that feels as well in a way bittersweet, right? Because the idea will be that everybody is happy, but because of the achievement on the project. But you understand that people are putting money, and nobody likes to lose money, right? So what we are trying to do, right, is working as hard as we can just to bring that token price back up, and just have all the people that were discontent back again, and help us to push the project.
Yeah, it seems like the substance or the reason why people were not happy was nothing to do with what you guys were actually deploying or building, but just purely the rate and volatility of the price of the token, which is, almost entirely out of your control once you launch the rocket. It sounds like you were telling people not to buy in the first place to slow the price jump. How do you allocate money internally? Is there a percentage of the token that every month you'll pull off and pay salaries, or how did you guys decide on the mechanism for paying yourself?
Yeah, it is based off of what we raised, right? So we're not using the token for anything. There are a lot of claims about the co-founders are dumping the tokens. We don't even have access to those tokens. Like we are fully vested until 18 months, and then from there is another 18 months. So we're not going to be seeing anything from it, right? Like what we're doing now is just with the funds that we raise. So that's how we're building the whole structure, just building tech, building marketing, getting operational team on board. And we are just doing some key hires at the moment. So like the team is getting stronger and stronger. And all that money is coming from that token sale, right? Like it's not that we are in the Bahamas. We are in the Caribbean spending these funds, right? Like as people like to believe, like, look, I wish at some point we can.
Yeah.
Now it's not. Like we're fully present. You can see us everywhere. Like we were in Paris 2 weeks ago for the NFT. We were part of the panel, one of the panels in NFT Day over there. Like we'll be everywhere, right? Like and that tells you, like, if the people are disappearing and they are not doing anything, well, fine enough, right? And you can give me a lot of stick. But when you are seeing teams that are working, there's people coming on board, like there is an effort, there is a huge effort happening. So, Look, I think, unfortunately, what I see in the crypto space, there is this kind of short mentality, right? And people believe that they are going to be millionaires out of investing $2,000, $3,000, right, in projects. And it could have been that 10 years ago people did it. At the moment, I think that's just a false expectation, right? And we need to be realistic on what projects can achieve or not, right? And say, yeah, could it have been better, or we could have structured things better? Yeah, it could have been, right? But at the end of the day, when you have this type of cases, right, where there are a lot of mixes on it, I don't know if at the end of the day the result would have been any better.
Yeah, it sounds like there's just a lot of different factors.
That's realistically what I said.
You don't know how things are tuned out, and so much of crypto is timing, right?
Yeah, indeed, and there were some other cases there. We got shielded by a YouTuber as well.
Oh, nice.
And that thing just made the whole price explode even further, right? But fine, no, we didn't have any contact with him, right? Like he just didn't even mention a name, right? He said, look, there are these guys that are launching a token, blah, blah, blah. important, opportunity, interesting, and that just make it even worse, right? And for us, it's like, wow, okay, great, but at the same time, you're feeling like, okay, what is going to happen next? Right? So I say there are multiple things that they go together, right? And
yeah, good, run with it. I mean, look, you guys are only 6 months into it, so I think there's only so much retrospective looking back you can do. You're really on the the 2-yard line going out. Going forward, you got, how many people are on the team now? How many people are working full time or at least part time?
Yeah, so full time we have at the moment 8, 9, and included the part time, it will be 20.
And
and the numbers are going to grow dramatically in the next few months.
And what's the focus of the business? How you guys communicate internally is capital deployed into these lenders. Is that kind of the center of the bullseye KPI?
Yeah, correct. And that's one of the things. Funny that you mentioned this. One of the components that we want to change, especially for the real world asset space, that you have metrics like TVL, right? That is the total value lock. For us, total value lock is important, but it's not the key metric. For us, as you say, is the funds deployed, right? Because the more funds are deployed, right, that means that you are providing more liquidity to users, right? To SMEs. And that's the key component, right? Like having a pool that has 80 million. Yeah, that's great. That's important because that determines in a way like how much money you're able to place. But the fact that you're able to rotate that fund, right, or that pool of capital 5 times in a year, that means that you are providing $400 million in liquidity, right? And that's interesting.
Can you say that again? So
right?
In order to provide $400 million of liquidity, you turn over 100 million for them?
You can rotate that pool, yeah, because you have a pool of 50 million, right? But you're able to rotate that pool 5 times, meaning that you have 5 cycles. Somebody takes the money and repays it, and then you lend it again, and then they repay, and then they lend it again, and then they repay, right? So that allows more people to be using the same amount of money or that same pool, right? And it's going to be providing more liquidity in the long run.
Got it.
You could be able to just take that 80 million and lend it once in a year.
Yeah.
Right?
Yeah.
But instead of that, you are going to be just rotating.
Yeah. And
it's interesting. You're going to be able to just provide more liquidity to more people.
In that, so when I think of the revenue, the revenue that you would make as a company is going to be based on the interest rates. So the interest rate that you're going to charge to the lenders is going to be higher than what you borrow, obviously. The number of times that you go through that cycle, I don't understand how that matters, because wouldn't the interest rate be charged on a per day basis on average? So it's like whether that comes in and out 5 times a year or 10 or 1, still it's how much money is out there in the market with you making interest rate on it. Is that the right way to think about it?
No, look, correct, right? Like, because it's well, it depends on component, like if it depends on the asset class, but also it depends on the negotiation you have with the asset originators, because there are some asset originators that are going to just have really short time frames for these loans, meaning that minimum that you are going to be lending the money would be probably 15 days or whatever they are doing before those 15 days, they will be paying 15 days anyway, right? And that's just to provide some decent return for investors as well, right? Like, for example, if you take funds and then you're repaying 2 days after, what doesn't make much sense. You need to have at least a set time that these guys are going to be just using the funds for, right? Because there is still some operational fee that you need to pay.
I see.
But going back into the interest, right? Like, yeah, it probably will be the same for us, right? But when you are thinking about the use of how this liquidity can help the final user, that is different, because you are going to be able to cover way more people potentially, and that's interesting.
You when you say the word you mean Defactor is able to lend more money out to more people? Gotcha.
Correct.
And is that, who takes the risk there? Say I borrow money from a lender, and that lender gets it from Defactor, who gets it from MakerDAO or wherever. If I don't pay it back, is Defactor ever at risk, or is it pretty much the lender is going to be the one?
No, definitely we do. Everybody does, right? And that's the reason that I was mentioning that concept of redistribution of risk in the ecosystem. That doesn't happen at the moment in the traditional space, because in the traditional space, not everybody has a skin on the game, and that's one of the things that we believe that DeFi can change. Right? Like you have a lot of players in the traditional space that are going to get paid regardless of the outcome of what they're doing. They lost your money, they get paid anyway, and they're going to charge you a fee.
In decentralized space, like in MakerDAO, because there's collateral.
No. That's in the traditional space.
Okay.
That's in the traditional space, right? In the traditional space. Now, what we are proposing is, like, look from the investor perspective. Well, they are putting the money, so they have skin in the game. Then the asset originator or the lender, right? These guys, they need to stake tokens that if there is a default, they are going to be the first loss. So they have something in there that if it doesn't go well, they're going to be just losing those tokens, right? And then the final user, well, if they don't repay, well, they have a lot of stake, right? Because they will be like the lender will be coming
right.
So,
but upstream,
everybody has something.
It sounds like the person who's receiving the funds, if they don't pay back, then it's like debt collectors. People are going to be harassing them. But upstream from that, whether it's the lenders, whether it's Defactor or MakerDAO, we'll say, each one of those three players, the lender has cryptocurrency that's staked. Defactor, you guys can't default on the debt because you have to have crypto staked in the DeFi, right? I mean, that's kind of the core pillar of how DeFi works, is you have to stake crypto in order to take a loan out.
Well, remember, this we're talking about real world assets, right? So it's different. What we're staking is the real world asset, right, per se. So that's a bit different in that sense, and it's just having control of that asset in a way. That's the big difference between the digital side and the real world asset side. So for, like you were saying, you were asking me about the risk from Defactor. Well, there are multiple components there, right? Because there is a default that's going to impact investors, right? If investors are going to be impacted, well, they may be losing confidence. But the other component is that the price of the token is going to suffer as well. And if the price of the token is at stake, means that we're going to be just accountable as well.
Okay. When you say the token, you mean the Defactor token? And the
Defactor token.
An example of what you're talking about is if a lender who borrows money from Defactor to give it out to somebody else, if that lender does not pay it back, then what happens? It's taken. They have money. They have Defactor tokens staked, so they would lose out on those stake tokens.
Yeah, and it depends of the size as well. It will depend on the size of the default, right? The default is not that big, so yeah, like those tokens will be taken and they will be used to repay that debt. And if there is something that has not been paid, so it will go into junior tranche, and you will take a chunk from that junior tranche. I see. Right, to be repaying the debt.
Is it usually 100%? So you have to stake 100% or 90% or some percentage of what you borrow?
No, a percentage of what you borrow, and it will be depending on every single characteristic. But just to give some sort of sense, it will be 15%, and it will be 5% in factor tokens and 10% in fiat or stable coins.
Okay.
Right.
Okay. So you would stake 15% in factor and then 10% in fiat, and then you'd be able to take out.
So it's 5% in factor.
5%
in fiat.
Okay. Gotcha. Right. Gotcha. Interesting. Yeah. Interesting. And how much of this are you still iterating on versus like proven model marching forward? Is it?
No, yeah, we're just in the beginning, right? Like this has had a good reception, right? But the fact is, we are thinking of what is next, and next is probably a matrix between staking tokens, interest rates that are going to be getting, right, and risk exposure. And when you have all that dynamic set, that's when it's starting getting interesting, right? Because you have models like, for example, Nexo. Nexo that when you are putting your tokens, they say, hey, look, if you put 5% in Nexo tokens, I'm going to give you better a yield on Bitcoin or USDC or whatever. So then it's starting just playing that dynamic bandwidth, and that's when it's starting getting interested. But for that, well, there needs to be a lot of coding behind
with Nexo,
and that's what we're working towards.
What do you think of Nexo? What's your
that's what we're trying to working. Look, I think it serves a purpose. I think it's a great concept. I like it, to be honest. I like it. I use it. I personally use it.
Yeah.
There are some options that are probably less centralized, and I think they have their purpose as well. There are some other ones that are even more centralized, like
what, Coinbase or something.
Well, you have you can do Coinbase as well, or you will have to. I forgot the other.
There's another one called Celsius.
Celsius is I haven't used it. It's an interesting concept as well.
Yeah, very similar to Nexo.
Nexo, BlockFi was the other one that I was. Yeah. So look, I think it will be serving purposes for things like I believe that you have a strategy from yield. Probably you need to have a little bit of each of those ones, right, to mitigate risk and just have it in a space that you are comfortable with.
Alejandro, I feel like our time flew by. When we ask you, are you writing publicly, tweeting, blogging, any personal links you wanted to share or references? Yeah,
look, we are fairly active on Twitter, LinkedIn as well, blog. We have our own blog in Defactor.
Oh, how about you personally? Are you on any socials?
Yeah, LinkedIn, Twitter. Those two are my main ones. Medium as well. But if you want to follow what I'm doing and what Defactor is doing, is LinkedIn and Twitter. Those two are the
sweet.
ones.
Anything else you want to throw out there? People that you've learned from or have helped you, or projects? You mentioned MakerDAO and you mentioned Copper and Nexo. Are there other people or projects?
Centrifuge.
Yeah.
Big shout to guys Centrifuge. Definitely they have been a great support from the Consolfreight time and now in Defactor. Big shout to Martin Kensel, that's the CEO and co-founder, Lucas, and Leah, that is not there anymore, but was great support, and Dennis.
That's great.
Well. So big shout out to those guys. They have been fantastic. They know what they're doing. They have been one of the first ones actually moving in this direction in the real world asset space. And they're great.
And you guys are you hiring now or bringing more people on the team? You mentioned that. You're in Ireland? Are people on the team completely remote or?
Yeah, we have a kind of a base in Ireland because few people in the team that are here, and we have a great Irish base. But we have people everywhere in the world. We have people in Croatia. We have people in India. We have people in the States. Some other parts in Europe, Spain, in Poland. So it's fairly diverse. At team as well, we have people from whatever ethnicity you can imagine as well. And we're looking for people. We're looking for people in multiple areas. We're looking for people in the operations, in the kind of the liquidity side as well, the investor side, investor relationships.
Cool.
So there's someone that is interested.
Holla.
contact us. We want to hear about good talent.
Sweet. Alejandro Gutierrez, I really appreciate your time, my man, and keep crushing it. You know, you guys are early, so keep doing your thing. Don't worry about these people barking at you. Just stay focused and keep working. All right, my man. Take care.
Mike, thank you very much for your time, and it was a pleasure.
Cheers.